Welcome to the daily update, where we'll go over the action in the market for Friday, January 28th, and then see how things look for Monday, January 31st. It's kind of going to be a broken record. We saw a bit of an improvement with some of our charts on Friday because we had a pretty strong up day. In a larger context, we really haven't gone anywhere. We got back to the highs that were set earlier in the week. So even though some of our indicators are readjusting, as looking at just a price chart, we're just kind of treading water. We're chopping sideways, at least throughout this week. You could make a case to say that, yes, we're building a base and prices may come up out of that from an extreme oversold condition, or we might continue to chop a little bit sideways to let the indicators recalculate before we start heading lower. So either way, either scenario is in play right now. Just to make this announcement one more time, on February 1st, I am starting a private Facebook group. It'll be small and kind of humble at the beginning. It's free, so feel free to contact me if you would like to be a part of that, but it will be moderated. I'll probably be doing most of the interacting in that group, but anybody is encouraged to offer up comments. We don't want to have self-promotion in the sense of spam or garbage things that we are putting in there. You'll also notice right away that I am not the kind of instructor who necessarily tells you what to do. I may ask a question, or you may ask me a question, and I will respond back to that with another question. So the idea is to get you to think, for you to develop your own style, or if you already have your style, to reinforce what you're already doing if it's working. We want to avoid politics too. There's other places where we can talk about those things, but not in this private group. We want to stay focused on the S&P 500. We want to have spirited and lively discussions. We can have a lot of Q&A, as well as if you want me to cover a particular topic, we could do a live broadcast. So if you want to be part of that, the best way, either send me a friend request on Facebook if you already know who I am, but there's a lot of other people with my same name on Facebook. So the best way would be at john@spxinvesting.com. Then I can send you a link to my Facebook page. Now, if you've been watching the other videos during the week, and I assume that's what you're doing. So just because I cover something on Wednesday or Thursday doesn't necessarily mean that I'm going to go back and re-explain that. These videos are long enough as it is. So those areas that I've talked more in depth about, I will go over them thinking that you already understand the context of which I'm talking about those things. So let's go back over what happened on Friday. We did have a lower open. The futures were quite negative during the night, and the selling continued. And it just looked like, okay, here we go again. We're just going to see more selling. But we were able to find support and build a bit of a base and then come up out of that. As the session went on Friday, buyers did drive prices higher enough to actually turn things positive. And we saw strong buying late in the day as the day continued to unfold. And then we ended up closing right around the 200 simple moving average. Right now, that's acting as overhead resistance. When we were coming down, that acted as support. Well, we broke through that. Now, as we're coming back up, it may act as resistance. We'll have to see if we get some kind of a gap opening, either higher or lower on Monday. In the close, they closed at the high for the session, so that's considered to be positive, and rebounded up to the weekly high that I mentioned before, and I'll show you that on the chart. For the day, we were up 2.43%. Volume was above average. The markets are still fixated on the idea of what happened earlier in the week at the Fed meeting. Not so much what they announced, but the press conference that came after that. But that's starting to fade away. That's a few days old now. We have a weekend transpiring, And by Monday, it's more in the rearview mirror and the markets will pick up on other things, I'm sure. We still have pretty weak technicals overall. We're still getting a lot of earnings reports. Inflation is still a concern. And with that comes interest rates and then the geopolitical concerns that are in the background right now as well. So buyers finally entered on Friday. Instead of selling into strength, we saw continued buying, at least as the day went on. And overall, it was a choppy and sideways week. We're still going with the idea that there could be 3, 4, or possibly even 5 interest rate hikes in 2022. One of the real catalysts to the upside was Apple. It ended up being up 7% on Friday after they reported earnings. The economic reports that came out, they were in line pretty much with what was expected. So that didn't really drive the market higher or lower in and of themselves. And the dollar index had a good week, and I'll show you a chart of that. The market still continues to be overvalued, and we are in a negative trend with a negative bias, but we're kind of chopping sideways right now. So let's look at the day's session. We're still not showing any kind of an extreme fear reading, at least based on the indicators that are calculated here. And if you want me to break this down a little bit more, I could easily do a video of all the different components that CNN Money uses to make up this graph right here, and then the chart next. These are a lot of indicators that I use. Some of them are not necessarily my favorite, and I have some reasons why I don't really care for them. Some of them I use different settings on some of these calculations, but if you want more of an explanation of that, I could easily do that. But we're pretty much in the middle right now. We're not showing an extreme reading. As far as the VIX, we came down overall. And then if we look at the bar chart, we came down and closed right about at the low for the VIX on Friday. So that could be seen as positive. But we saw that earlier in the week, thinking that this could lead to some continuation in the buying or a rebound. That didn't happen. Well, on Friday, we did close near the low. We'll have to see if there's any carry through for that over into Monday. And then the VIX of the VIX, it also continues to fall overall. As far as the sectors, I switched this around a little bit because we had a positive day. And if you look at the thumbnail that I use for each of these videos, if we have an up day, I use a green arrow in the thumbnail. If we have a down day, I use a red arrow, just a little bit of subliminal messaging there. But since we had an up day overall, I organized these according to the gains. And the tech sector had a really good day on Friday. The sector was up 4.37%. Real estate did pretty well. Communication services, discretionary, which has just been getting hammered a lot, it had a good day. So a lot of the areas that had seen weakness so far into 2022, that, well, they saw some buying opportunities, at least on Friday. And then the energy sector was actually down a little bit, and it has been performing a little bit better, but it tends to move more in line with interest rates. And then overall, we're seeing energy up so far since the high that we set on January 4th. And discretionary is still, it was up on Friday, but it showed some improvement. As far as inflation, the BDI ticked up just a little bit on Friday. As far as our technical alerts, at the beginning, we saw where the NASDAQ went above 13.4, that was positive. And then as we went into sell mode, at least during the early part of the day, we saw a lot of red or negative technical alerts that were triggered. The S&P actually crossed below 4,300. And then as the day wore on, the NASDAQ saw a climb first above 13.5, then 13.6. The S&P ended up climbing back above 4,400. The NASDAQ went up over 13.7. And then some of the sectors saw pretty good strength. Oil set a 4-year high, which again, if you're an investor, that's good. If you're a consumer, that's pretty pricey. And then the dollar, it set a new 52-week high. So looking at the chart for Friday, we didn't really even gap down. We opened up kind of flat and then boom, saw a lot of selling right at the open. We set a little bit of a base. We didn't really hit any necessary support level, not even any earlier support from during the week. But then we saw some buying come in. It came back up. We were actually able to turn positive. And then we drifted. We came back down to the pivot level, which now acted as support. And then if you were watching this as the day went on, well, this is about the time when the real intense selling would start. There was some selling, but we were able to drop down and then saw renewed buying going into the close. And we closed at the very high of the session. And if you look across this chart, we're just about at the high for the week. So overall, we're just chopping water. We're going sideways right now. Yes, the ADX is still showing that we have a trend, but that's based on the other movement that came before what we saw for a lot of this week. We're currently down 7.6% for the year in the S&P. Growth saw a bit of an advance on Friday, where value saw a bit of a decline. Then the NASDAQ, which has been very underperforming, if I said that right, underperforming quite a bit. The S&P 500, well, it bounced up a little bit and actually outperformed, at least on Friday. Overall, the trend is still down for the NASDAQ 100 versus the S&P 500. As far as our trend, we're coming off that extreme negative reading, and we're not really seeing buying improve based on the ADX, but it is an extreme negative territory. However, the line that we look at for trend is going up and it's above 20. So we are in a trending market. And because of this indicator and the other indicators that we look at least the short and possibly intermediate term trend continue to be down. As far as breadth, we saw a real nice advance based on price and volume on Friday. However, we just turned up ever so slightly on the moving averages. With that bounce on Friday coming out of an extreme negative reading, the ratio bounced up, but we're going to want to see this blue line go above red for that to turn back positive. Again, we're not sure if we're just resting for a little bit before we continue lower, or if we're building some kind of a base that we can come up out of. The new highs, new lows, they continue to weaken overall. Even with the advance on Friday, we saw an increase in new 52-week lows. So this continues to go down, and we're starting to get pretty extreme. And the 10-day moving average, it also continues to head lower. The accumulation distribution, it is negative, but it turned up ever so slightly, but we're seeing this red moving average start to roll over. So we're going to have to break above that to be positive number one. And then we're going to want to see this red line turn back up for positive number two. So the technical picture may be improving, but it's not necessarily positive. Short term, the moving averages continue to roll over and we're just chopping sideways. The 20 moving average, it turned up out of extreme negative territory. The 50 has also turned up slightly, and even the 200 turned up slightly on Friday. So that's somewhat positive. And then here with the 200-day either simple or exponential moving average, we were able to get above the exponential, but now we're bumping into the simple moving average. And that's just where we closed on Friday. So if we want this strength to continue, we're going to want to see prices go above that moving average. It's not necessarily magic. There's other times when we broke below this moving average before and everybody got all freaked out. Well, we were able to come back above it. As far as those stocks that are above their 50 period moving average, that's turning up. The 150 moving average, a little longer term, extreme negative, but turning up. 200 period moving average, also extreme and turning up. But we're going to need to see follow through if the climate is going to switch from negative to positive. MACD, It's extreme negative, but with the advance on Friday, we saw just a little bit. Actually, it went more sideways. If we see more follow through, this could turn back up. And we saw the histogram actually advanced ever so slightly on Friday. The Swinland short-term oscillator, it turned back up based on price after an extreme negative reading, and it's also turning back up based on volume. The McClellan oscillator, it's still below zero, so it's negative overall. And anytime the McClellan oscillator is below zero, that measures a downtick in the summation index. The McClellan oscillator is the short-term indicator. The summation indicator is the longer-term indicator. But because this is bouncing up out of an extreme negative reading, that potentially could be positive. Stochastic RSI, it moved up out of extreme negative territory. And then this is one that I don't show very often. This is the rate of change for just one day. And because of how we've been chopping around, this is kind of an extreme reading, which that's a bit of an alarm. When we get up into this area before, sometimes we may turn and come back down a little bit, or we may chop sideways. So the market may be into a consolidation period. We're not seeing that on the ADX. We want to wait until we see that trend start to either get weaker, if not actually develop into a trendless environment. For those of you that do more credit spreads and iron condors, if you're a trend-based investor, you're probably investing to the short side right now, but you might want to come down and be a little more careful with your stops. We're seeing some improvement in the charts, and we could be going back into a sideways phase. The rate of change 5 period, yeah, it's coming up out of that extreme reading and has actually crossed above zero. The 10 period rate of change coming up out of an extreme negative reading. The 20 period coming up out of an extreme negative reading. 50, again, it's turning up, but it still has not come above that extreme negative reading. And the 200, it's starting to turn back up too after showing a pretty extreme negative reading. So we're seeing a lot of flow through, at least on some of our indicators. Standard deviation, because we're starting to chop around sideways, it is now starting to roll over after giving a pretty extreme reading. Percent B, and this will probably, if things stay about the same, this will probably be the last day I show this chart until it tells us something again, but we're coming up positive after having an extreme negative reading. William percent R, this thing really moves quickly because of the up day. That is going up slightly. Intermediate term, we're still rolling below the 50 period moving average with both of those moving averages going down, and the blue is below the red. So that is still negative and will be negative until price gets back up into that region, if that ends up being what happens. The PMO, price momentum oscillator, it didn't turn, but at least slowed down from its extreme negative reading. Also based on price and volume, we continue to be negative. The PMOs that are rising, that's coming up after giving an extreme negative reading. The buy signals continues to decline because we've been chopping sideways. And then those that are above zero, it leveled off just a little bit on Friday. With the selling that we saw earlier in the day, we saw the BPI generate some new sell signals, but this closed right at the high for the session. So you can see it as negative because we're continuing to fall. We're also getting into extreme negative territory. You could see this as positive because we closed near the high of that range. Our rainbow, yeah, we're still slicing through it and we're consolidating right inside the rainbow. When we're going to start to really notice things is if this blue moving average ends up crossing below the red. We haven't seen that. We didn't see that through pretty much any of 2021. and a lot of 2022. So that's some of the longer term things that I'm picking up on to show that we're seeing some weakness. Short-term stochastics coming up after an oversold reading. Intermediate term, same thing, coming up, and we're turning up slightly on the longer stochastics. The vortex coming down a little bit negative, coming up ever so slightly positive, but it's still negative overall. When these lines cross and the green goes above the red, that's when a positive signal is generated. This is the summation index, which goes with the McClellan oscillator. Because we're still below zero, the summation index based on price and volume continues to decline. All of our momentum oscillators are showing a little bit of improvement. Those that calculate a little bit quicker, those that don't are still in a pretty solid downtrend. Chaikin money flow showed a little bit of an improvement on Friday. CCI coming up out of an extreme negative reading. The ulcer index, because of the selling that we saw, it continues to climb. We're going to need to get out of this bunch of conglomeration of days if we want to see this start to turn back down. And this is just a longer term look. Copic really didn't change all that much. It went a little bit sideways. And the longer term look as well. The boom index, or excuse me, boom indicator, because we're getting so far away from the moving averages, it really showed some improvement on Friday, pretty much across the board here. Sean, trend meter coming up out of an extreme negative reading. So we're trying to figure out, are we just working off an oversold condition, or is this laying the stage for a rebound? As far as our trading systems, the Elder system continues to be going sideways with the blue bar. However, the SAR continues to be negative. It's either one or the other. So this thing, there's no in between with the SAR. It's either positive or negative, which can be really good when you're in a trending environment. This can be very frustrating if prices go against you or you're chopping sideways. As far as our different charts, the Heiken Ashi chart is pretty much floundering sideways. We didn't really have anything new drawn on the Keiki chart or with the Renko chart. The 3-line break, it's trying to put something positive in here. And this, again, this will redraw as things start to change. Because we had an update, the equi volume chart has a green candle, and we're coming up out of an extreme reading with the ease of movement indicator. This is what was interesting too, the point and figure, which showed us something positive after Thursday. Well, even with the update on Friday, we're seeing 3 more zeros drawn in here, which is more negative, but longer term, we are still in an uptrend. Our long-term charts, we're not seeing a real divergence between the S&P 500 and the equal weight. That means that all of these stocks are participating in the downside. Special K continues to fall, and it will until we see some really significant price movement in the opposite direction. And here's the longer term view of the Special K breakfast indicator. As far as looking at some other indexes, the S&P is going sideways. The mid caps are showing a little bit more weakness, but really going sideways. The same thing with the small caps. They got hit pretty hard only to come back and finish fairly strong on Friday. The FANG stocks closed right at the high, but continue to be choppy in a sideways direction. ARC, it was actually up 3.89% on Friday, but overall has a lot of damage to repair if it's going to get back into the positive side of things. The Dow, again, we're chopping sideways, closed at the high for that day, but we still have overhead resistance. Same thing with small caps. We really started to set some new lows, but the fact that we were able to rebound and close at the high could be seen as positive. We're also starting to watch this 50-period moving average potentially crossing below the 200-period moving average, and pretty much the same thing with the mid caps. The NASDAQ treading water sideways, watching this one moving average start to roll over, and the 200 has really moved, it's flattened out quite a bit. The NASDAQ 100 chopping sideways, pretty much the same story across the board, chopping sideways, shorter term period moving average is showing some weakness, flattening out of the 200-day. And the Vixen, again, which is based on the NASDAQ 100, it fell and closed right near the lows on Friday. This is fear in the NASDAQ 100, and it really declined on Friday. But we're still pretty extreme overall. The NYSE treading sideways, closed near the highs, have some overhead resistance, watching the moving average as well. We're seeing a lot of the same story being played out across different indexes. Wilshire, same thing, sideways, a potential weakening. And then all stocks actually had a bit of an uptick on Friday. Looking at some of our international indexes, China is rolling over a little bit, but still positive. Emerging markets are rolling over negative. Europe rolling over negative. Japan rolling over negative. And the S&P, which is continuing to roll over negative. Broad markets, copper continues its sideways movement. The dollar, which had a really good week, it got up into the 97.27 for the close. It was actually up a little bit on Friday. It saw its real strength on Thursday. This is the daily chart. And here's the weekly chart. Crude oil was up just about 0.25% on Friday, but we're still in the 86, almost the 87 range. Gold, yeah, it's floundering, and we're even seeing a cross now between these two moving averages. Palladium, it continued to go up slightly. This isn't a big market with a lot of volume, but I like to keep an eye on this because it really can move sometimes. It really shot up, then it really went down. It's all over the place. So if you like something volatile, palladium might be something of interest to you. Silver, after going up to the 200-period moving average, has just been getting hammered. What was that? Maxwell silver hammer right here. CRB was up about 0.75% on Friday overall, and it continues to be in an uptrend. This is what can also feed into inflation fears. And then going back 1 year, looking at our intermarket analysis, oil has been just skyrocketing. The S&P turned up a little bit on Friday. The dollar showed a bit of an improvement. Its real strength was on Thursday. Gold continues to fall, and bonds went basically sideways on Friday. We did see a change in some of the interest rates. Bitcoin, it's still floundering around. It's up into the 37s now, and it will trade over the weekend and in the evenings. We'll have to see. Again, the area that I'm really looking for is the 29 to 30 level. If we really go below that, you could see a lot of stop losses triggered. You could see a lot of people who sold puts at that level suddenly freaking out, and that could really drive prices lower. As far as bonds, we saw a bit of a downturn with the longer term interest rates and even with the 2-year. Internationally, we saw UK bonds actually uptick. Japan upticked a little bit, and Germany's kind of going sideways in negative territory. There's a lot of geopolitical stuff going on. You hear about Russia and Ukraine, but Germany's in the news, not so much the UK right now, but there's just a lot of different dynamics going on. And then bonds overall have been falling and are in a pretty solid downtrend, which is what needs to happen if interest rates are going to go up. So on Monday, the downtrend does continue. Nothing was decided this week. We're going sideways. Short and intermediate term, we're still coming off of that oversold condition with some of our indicators starting to bounce. The long-term trend is still up, but showing signs of weakness. We still have earnings that'll be coming out this week. On Monday, we have the Chicago PMI. I know that's for only one area, but that can sometimes be a market mover. And then we have the geopolitical events that I just referred to. So our conclusion is that the S&P is in a downtrend. It might be weakening, but we're not seeing that in the charts yet. We're just seeing some sideways action that's not flowing through to the ADX right now. The short-term bias is negative, but may attempt at a continuation of the bounce that we saw on Friday, or we may just keep chopping sideways. Intermediate term is negative, but may improve if we see more buying. The long-term bias remains positive, but showing signs of weakness. So thank you very much. Have a wonderful weekend, and I will talk to you again after Monday's action.